Hello everyone, welcome to my channel. I'm Lavanya. In the previous video lecture, we had discussed about section 184, section 185 and section 40b. We had also discussed about the meaning of book profit. Today, let us start the session with proforma of book profit and eligible remuneration and also with an illustration. Let's look into the proforma to understand how to calculate book profit and eligible remuneration. Now, how to compute book profit? First of all, we'll consider net profit as per profit and loss account. Now, for this value, we will add inadmissible expenses debited to profit and loss account. That means those items which are not deductible and those values which have already been taken on the debit side of the profit and loss account will be added back to get proper book profit. That means to say any kind of remuneration given to partners in the form of salary, bonus or commission will be added back as inadmissible expense to the net profit to get proper book profit. Now, any kind of interest on capital which exceeds 12%, any interest on capital which exceeds 12%, that means whatever is in excess of 12% will be inadmissible value, and within the limit of 12% will be treated as admissible value, admissible expense. So in this case, if the interest on capital exceeds 12%, the exceeded value will be treated as inadmissible expense to the firm, and if it is within the limit of 12%, then you will ignore, you will not calculate it for the purpose of calculating book profit. You will not add it back to net profit. Now, next is if they have not considered business income. If they have not considered any business income on the credit side of profit and loss account, which are actually considerable here, which should be considered, then such items should be added back to get proper book profit. In case if there is any overvaluation of opening stock or undervaluation of closing stock, that will be considered. Now, less admissible expenses not debited to profit and loss account. Those items which are deductible here, if they have not considered admissible expenses, then you will deduct it. You will deduct expenses on the debit side of profit and loss account. These are business expenses. If they have not considered the business expense on the debit side of the P&L account, then you will deduct here to get proper book profit. So admissible expenses not debited to profit and loss account will be considered here. If they have considered any kind of non-business income, for example house property, income from other source, now these items are not related to business or profession, and hence they should have not considered here on the credit side of P&L account. If they have considered on the credit side of a P&L account, then you will deduct the value to get proper book profit. And if in case if there is any undervaluation of opening stock or overvaluation of closing stock, then in that case we will deduct the value. So after adding or deducting the given values, the final answer which we get is called as book profit. Now let's check how to calculate admissible remuneration. Admissible remuneration is given only to the working partners, and they should satisfy section 40b, right? We have already discussed about 40b in the previous session, about section 185, 184. We have discussed all this section in the previous session itself. Please check the video. Now here, where all the above conditions are fulfilled, remuneration to partners is admissible to the following extent. If they satisfy section 184 as well as 40b, then they can avail the benefit of admissible remuneration. to avail the benefit of remuneration, there are two criteria that they should satisfy. Now, point number one is actual remuneration paid or payable to partners or maximum limit, whichever is less. I repeat, whichever is less. The lower amount is your admissible remuneration. Now, let's look into this. Now, actual remuneration is nothing but all the salary, bonus or commission given to working partners only. Working partners only. So it includes remuneration, here includes all the salary, any kind of benefit in the form of remunerations, whether it is salary, bonus or commission given to working partners, will be compared with maximum limit. Now, what is this maximum limit? In case if the book profit, that is book loss, book profit is negative, then always your maximum limit will be 1,50,000. I repeat, if the profit which you have shows the negative balance, that is book loss, the maximum limit is always 1,50,000. In case if it is positive, then on first 3 lakh, 1,50,000 or 90% of book profit, whichever is higher. Now, when you are calculating maximum limit, you will calculate or you will compare the higher value between 1,50,000 and 90% of the book profit. On the remaining balance of book profit, say for example we have 5 lakh of book profit, I have considered first 3 lakh into 90%, that is 2,70,000 or 1,50,000. So 2,70,000 is higher, so first we will consider 2,70,000. Now on the remaining balance, here means on the remaining balance, that is 5 lakh minus 3 lakh, the remaining balance is 2 lakh. Now this will be calculated at the standard rate of 60%. Now summing up the value of 2,70,000 and the value which we get here will be our maximum limit. So eligible remuneration or admissible remuneration is the difference of or the lesser value between actual remuneration paid or payable to working partners or maximum limit, whichever is less. For example, if we have remuneration of rupees 90,000 and maximum limit, let's assume it is 1,50,000. In this case, eligible remuneration is 90,000. For example, let's consider another case. If we have actual remuneration of rupees 2,80,000 and maximum limit is, let's assume it's 2,15,000, then in that case maximum limit will be the lesser value and hence this will be your eligible remuneration. So the value whichever comes least or whichever is lesser value, that will be your eligible remuneration. Now let us look into the problem to understand the concept better. P, Q and R are partners of a firm of equal share. The profit and loss account for the year ended 31st March 2019 shows net profit of rupees 2 lakh after debiting the following. So the value of net profit is rupees 2 lakh. Now see here, net profit as per profit and loss account, we have considered 2 lakh here, right? After debiting the following, they have used the word after debiting. After debiting the following means all the expenses or items given in the problem is already deducted on the debit side of the profit and loss account. For example, if we have profit and loss account here, all your business income minus your business expense is your net profit, right? We have net profit of rupees 2 lakh in the problem. So here business expense, all these expenses like salary, bonus, interest on capital, rent and commission, all these items are already debited, that is deducted on the debit side of profit and loss account. Now let's look into them. in detail. Now point number 1, salary of rupees 30,000 and 20,000 paid to P and Q respectively. As we already discussed in the pro forma, any remuneration paid to partners in the form of salary, bonus or commission will be treated as inadmissible expense to the firm, and it will be added back to the net profit to get proper book profit. I repeat, any remuneration given to partners in the form of salary, bonus or commission will be added back to net profit. Now for the purpose of assessing partnership firm, the income paid by a partnership firm to its partners is called as profit. It is called as profit. It is not salary, it is not bonus nor commission. And hence these values are inadmissible expense to the partnership's firm. So we will add back the deducted value to the net profit to get proper book profit. So salary of rupees 30,000 and 20,000, which is paid to P and Q respectively, will be added back as inadmissible expense. Under the head remuneration to partner, partner P is given 30,000 and partner Q is given 20,000. So it is added back to the net profit to get proper book profit. Now second point we have is bonus of rupees 25,000 to R. Now bonus of rupees 25,000 is given to R. Let's move directly to fifth point, commission. Commission is also part of remuneration, and hence this is inadmissible value. 15,000 will be added back as inadmissible expense to the profit and loss account, that is net profit. Let's move to next point, point C. Rupees 10,000 interest on capital to P calculated at 20% per annum. So as we have already discussed in pro forma, whatever exceeds 12%, if the interest on capital given to partners exceeds 12%, then it will be treated as inadmissible expense, and if it is within the limit of 12%, then it will be treated as admissible expense to partnership firm. So here in this problem we have 20% of interest on capital. So to the extent of 12% is admissible. So the exceeded value here is 8%. So this 8% will be treated as inadmissible value. So out of 10,000 interest on capital, 10,000, what is the percentage of interest on capital given to partners here? It is 20%, out of which only 8% is admissible. 10,000 into 8 divided by 20, now you will get 4,000, which will be treated as inadmissible expense given to partner in the form of interest on capital. Let me repeat the point, interest on capital. Now interest on capital to the extent of 12% is admissible, and whatever exceeds 12% will be treated as inadmissible value, and hence such inadmissible value is not deductible, so we will add it back to the net profit as inadmissible expense. Let's move to next point, point D. Rupees 20,000 for rent of business premises paid to partner Q. So rent is an allowable expense to the firm, whether it is paid to partner Q or any other third party. So in this problem we will ignore rent. We will ignore rent since it is already deducted. So no need to consider rent, and hence we will ignore rent here. So now we have considered all the points that is given in the problem, and whatever we get after adding or deducting the values given in the problem at the end is called as book profit. Now the value which we get after adding or deducting the given values is called as book profit. So now we have calculated book profit. The second question they have asked us to calculate is eligible remuneration to working partners. All the partners are working partners, so eligible remuneration to working partners we will calculate now. Now eligible remuneration is very simple and easy to calculate. There are two criteria that we will consider. Point number 1, actual remuneration paid to working partner. Second one is maximum limit. So actual remuneration paid to working partners is rupees 30,000, rupees 20,000 as salary, 25 and 15,000 as commission. So 30,000 plus 20,000 plus 25,000 plus 15,000. So the same values we have taken here, 30, 20, 25 and 15. So total remuneration paid to partners is 90,000. It's 90,000. Now the second criteria is maximum limit. How much book profit we have in the problem? 2,94,000. So since this is within the 2,94,000, since this is within the limit of 3 lakh, we will not be considering the second sub criteria under maximum limit. So the first one is on first 3 lakh at the rate 90% of the book profit or 1,50,000, whichever is higher. So since we have 2,94,000, you will calculate on 2,94,000 only. 2,94,000 into at the standard rate of 90%, which comes to 2,64,600, or the comparison is with 1,50,000. Higher value will be considered for the purpose of calculation. So between 2,64,600 and 1,50,000, 2,64,600 is higher value. So you will consider 2,64,000 here, 2,64,600 here. So the eligible remuneration is the lower value of actual remuneration or maximum limit. So you will compare between actual remuneration or maximum limit. So here in this case we have actual remuneration of 90,000 and maximum limit of 2,64,600. Since 90,000 is the lower value, your eligible remuneration will be 90,000. I repeat, you will compare between actual remuneration or maximum limit, whichever is lower. Now in this case we have 90,000 and 2,64,600. Since 90,000 is the lower value, this will be your eligible remuneration. You're not adding nor deducting. It's just a comparison between the values given here, actual remuneration or maximum limit. Let's look into the next problem. Sriram, Raghuram are working partners of a professional firm. So it satisfies the condition of section 184 and 40B. So that satisfy both section 184 and section 40B. Their profit and loss account ratio is 4:1. Right. Now profit and loss account is given. We have general expenses, we have interest on capital, donation, salary, bonus, commission, depreciation. Net profit of rupees 1,02,000 is given in the problem. Gross profit. Okay, so general additional information we have. General expenses to the extent of 18,000 is not deductible, right? So we have adjustment here. So general expenses to the extent of 18,000 is not deductible. General expense is a regular expense to any organization or firm. but they have specifically told us to the extent of 18,000 is not deductible. So when they show it on the debit side of the profit and loss account, they have already deducted the value. But here they are stating it as not deductible value, and hence you will add back to the book profit stating inadmissible expense. Okay, now let's check the values here. Net profit as per profit and loss account, we have 1,02,000, which is already given in the problem. Right, you will add all the inadmissible expenses. Point number 1, we have general expense to the extent of 68,000, out of which 18,000 is not deductible. So when they take it on the debit side, they have already deducted. So you will add it back to the net profit to get proper book profit. General expenses not deductible, the value is 18,000. Second point we have here is interest on capital to partners. If they just give us interest on capital and if they don't mention us anything, then this value will be treated as admissible value. But let's see additional information. Yes, we have a point here. Interest on capital to partner is in excess of 15,000. So in this question they have not given us any percentage as such, but they have directly given us the value which is in excess of the limit. So directly interest on capital, how much value we have, 15,000, will be considered here directly. Next point we have here is donation to National Defence Fund. So any donation given to any National Defence Fund or for anybody. Now donation is not a general expense. It is not a regular expense to an organization, nor it is a business expense, and hence it is always inadmissible. Now the value we have here is 25,000. So directly we have considered the 25,000 value here. Next point is salary, bonus and commission to partners. The value is 2,85,000. As we have already discussed in the previous problem itself, salary, bonus or commission given to partners will always be an inadmissible expense. So directly 2,85,000 will be considered here. And then the next point we have here is depreciation. Depreciation is an allowable expense to any organization. Now all the fixed assets will get depreciated gradually and continuously, and it is a non-cash expenditure to all the organization. Now if they had not given us any adjustment in the problem, then depreciation is always an allowable expense. Depreciation is always an allowable expense, but we have an adjustment here. Depreciation allowable as per income tax rules works out to 32,500. So here in the problem we have 30,000 depreciation, but they have told us 32,500 is admissible. So the actual value, the difference value, will be treated as allowable value. That means we have to deduct further 2,500 more. So in this case, for easy calculation, first of all we'll take the depreciation value that is given in the profit and loss account, that is 30,000. We'll treat it as inadmissible expense. Okay, now depreciation allowable as per IT rules, will consider it under the admissible expenses column, 32,500. This is one and the same. If you directly take 2,500 here, is same as 30,000 and 32,500, which we have taken here. So either of the method you can follow. I repeat, now whatever we have on the debit side of profit and loss account, that is depreciation value 30,000, we have treated it as inadmissible expense, and whatever is given in the adjustment, we have taken it as admissible value 32,500. So Now let us look into the calculation part. We have 1,02,000. Adding up all these value, we get 3,73,000. Now 1,02,000 plus 3,72,000 will get 4,75,000, but we have a negative balance, that is depreciation, to the extent of 32,500. So the difference value which we have got here is 4,42,000, which is called as book profit. I repeat, whatever we get after adding or deducting the given values will be called as book profit. So the book profit is 4,42,500. So the actual question is to calculate permissible amount of remuneration to the working partners. So to calculate permissible remuneration, we needed book profit. So we have calculated book profit. Now let us calculate the permissible remuneration, which is nothing but admissible remuneration. So to calculate admissible remuneration, we will consider two criteria. First one is actual remuneration paid to working partners. Actual remuneration paid to working partners. So actual remuneration is 2,85,000 given in the form of salary, bonus and commission to the working partners. So you will directly consider 2,85,000 here. Second criteria is maximum limit. Now what is the book profit value we have in the problem? It's 4,42,500. So the book profit is 4,42,500. So on first 3 lakh at the rate 90% or 1,50,000, whichever is higher. So on first 3 lakh, if you calculate 90%, you will get 2,70,000, or you will compare with 1,50,000. Now which is higher? Obviously 2,70,000. So you will take it to the outer column. Right? The second criteria is on the remaining balance. On the remaining balance at the rate 60%. So total we have, our book profit is 4,42,500, out of which we have already considered 3 lakh rupees. So the remaining value is 1,42,500. Right? On this 1,42,500, let us calculate 60% into 60% comes to 85,500. So we will consider 85,500 here. So these two are same. So let me repeat, on first 3 lakh of your book profit, you will calculate at the rate 90% or 1,50,000, whichever is higher. Now this is standard values. Now second point is on the remaining balance, you will calculate at the rate 60% always. So when you're calculating 60%, you have to take the remaining balance only, that is 4,42,000 which we have as book profit, and minus 3 lakh which we have already considered in the first point. The remaining balance is 1,42,000. On this you will calculate at the rate 60%. So the value which we get is 85,500 we have taken here. So summing up these two values, we will get 3,55,500 as maximum limit. So now eligible remuneration is least of the following two. Now whichever is less, which is less, 2,85,000 or 3,55,500? It's obviously 2,85,000. Now this will be your eligible remuneration.
So that's it for this lecture. Please comment below if you have any questions. We'll meet very soon in the next video lecture. Till then, happy learning. Stay tuned.